boom and bust, prosperity and panic. The American economic story is a roller coaster of dizzying highs and devastating lows. Recessions are those painful, often terrifying chapters where the bottom seems to fall out. Massive job losses, plunging markets, and widespread hardship. But they are also moments of profound change, reshaping everything from how we bank to how our government responds to crisis. Today, we're not just looking at numbers on a graph. We're embarking on a journey through the 10 worst recessions in U.S. history, listed chronologically. We'll explore what triggered these economic earthquakes, how they shook the nation to its core and the lasting legacies they left behind, from the creation of the Federal Reserve to the unprecedented interventions during the COVID-19 pandemic. This is more than just history. It's a lesson in resilience, and sometimes a warning. Before we dive into these historical crises, let's quickly define our terms. What exactly is a recession? And what typically lights the fuse for such widespread economic turmoil? In our economic system, growth is usually the norm. A recession, broadly speaking, is when the economy, measured by gross domestic product or GDP, shrinks instead of grows for a significant period, typically 6 months or more. And there's no average recession. They can be sparked by anything, from mismanaged money supply and financial market meltdowns to wars, soaring energy prices, and as we're increasingly seeing, even ecological crises. Each one is a unique storm with varied effects. The Panic of 1907. Presenter. Our journey begins over a century ago with the Panic of 1907. Imagine a time before the Federal Reserve, before a safety net for banks. This crisis erupted from a perfect storm of bank failures and an out-of-control expansion of credit. The New York banking system teetered on the brink of collapse. It was a financial wildfire that spread rapidly, leading to widespread panic. The aftermath? A desperate call for reform, ultimately paving the way for the creation of the Federal Reserve System itself, a monumental shift in American finance. The Great Depression, 1929 to late 1930s. Next, the undisputed heavyweight champion of economic calamities, the Great Depression. From 1929 into the late 1930s, this wasn't just a recession, it was an economic apocalypse. Triggered by the infamous 1929 stock market crash on the New York Stock Exchange, the numbers are staggering. GDP plummeted by nearly 30%. Unemployment soared to a terrifying 25%, 1 in 4 people out of work. Thousands of banks failed, wiping out savings. The Federal Reserve's tight monetary policy, ironically, only deepened the crisis. This era didn't just influence policy. It seared itself into the American psyche, leading to landmark reforms like the FDIC to ensure bank deposits and a complete rethinking of federal spending and economic intervention. 3. Post-World War II Recession, 1945. As World War II concluded in 1945, America faced a new challenge, shifting from a total wartime economy back to peacetime. This rapid transition caused the post-World War II recession. A sudden, sharp drop in government spending led to a significant dip in GDP growth. While thankfully brief compared to other downturns, it was a stark reminder that even victory has its economic adjustments. The Recession of 1953-1954, Post-Korean War Recession. History often rhymes. Similar to the post-World War II period, the end of the Korean War saw government spending fall again, coupled with a dip in consumer demand. The result? The post-Korean War recession of 1953-1954. GDP declined, and unemployment ticked up to 5.9%. Though relatively short, it marked a clear interruption in the booming economic expansion that had characterized the early post-war years. The recession of 1973 to 1975, the oil shock. Fast forward to the 1970s, and a new kind of crisis hit. The recession of 1973 to 1975, largely triggered by the OPEC oil embargo. Suddenly, the lifeblood of the industrial world, oil, became scarce and incredibly expensive. Soaring oil prices ignited rampant inflation, GDP fell and unemployment climbed. Financial markets were thrown into chaos and consumer confidence nosedived. This era introduced many to a painful new term, stagflation, that toxic mix of stagnant economic growth and high inflation. A brutal combination. 6. The Recession of 1981 to 1982, Volcker's anti-inflation fight. The stagflation of the 70s set the stage for our next downturn, the Recession of 1981 to 1982. This one was, in large part, deliberately engineered by the Federal Reserve under Chairman Paul Volcker in a desperate bid to break the back of persistent inflation. The Fed raised interest rates to almost unbelievable levels. The Fed funds rate soared to nearly 20%. This slammed the brakes on the economy, causing a severe contraction in industrial production and the housing sector. Unemployment hit 10.8%, the highest since the Great Depression. Many economists argued this painful medicine was necessary, but the cost was steep. 7. The 1990-1991 recession, Gulf War recession. The dawn of the 90s brought the Gulf War recession of 1990-1991. This downturn was fueled by a spike in oil prices during the first Gulf War, combined with a slump in consumer and business confidence. GDP declined, unemployment rose, and the banking and real estate sectors took a hard hit as lending tightened. It was a sign of the times, an economic malaise that wasn't just American, but part of a broader international slowdown. The 2001 recession, dot-com bust, and 9/11. The new millennium began with the 2001 recession. Often described as mild, its roots lay in the bursting of the dot-com bubble, the speculative frenzy around internet companies. The economic pain was then tragically amplified by the September 11th attacks on the World Trade Center. Voiceover. While the housing market surprisingly remained stable, GDP did dip, and unemployment rose. The Federal Reserve responded by aggressively cutting interest rates to try and stimulate growth and restore confidence in a shaken nation. The Great Recession, 2007 to 2009. The housing collapse. Just a few years later, the world faced its most severe economic crisis since the Great Depression, the Great Recession of 2007 to 2009. This one was ignited by the spectacular collapse of the U.S. housing bubble and the subsequent credit crisis that ripped through global financial markets. We saw major financial institutions like investment bank Lehman Brothers crumble. Unemployment shot up to 10%, and GDP fell by over 4%. The crisis prompted unprecedented sweeping interventions by the Federal Reserve and the federal government to prevent a total meltdown of the financial system. The National Bureau of Economic Research officially marked it as the deepest recession since World War II. 10. The COVID-19 recession, 2020. The pandemic shock. And that brings us to our most recent and perhaps most unique major downturn, the COVID-19 recession of 2020. While not always included in long-term historical rankings due to its recency and unusual nature, its impact was undeniably historic. Triggered by global lockdowns and a sudden, almost complete halt in business activity, the second quarter of 2020 saw an unprecedented GDP contraction. The unemployment rate skyrocketed to levels not seen since the Great Depression. This crisis was met with the most aggressive fiscal and monetary policy responses in history from both the U.S. government and central banks worldwide, trying to cushion an unparalleled economic shock. From the bank runs of the early 20th century to the global pandemic of the 21st, these 10 recessions paint a vivid picture of America's economic journey, its vulnerabilities, its responses, and its resilience. Each crisis, though painful, brought lessons and often led to significant changes in policy and financial structures. Understanding these past storms doesn't just tell us where we've been, it helps us navigate the economic uncertainties that still lie ahead. They remind us that economic stability is never guaranteed, and that the forces shaping our financial lives are complex and ever-evolving. Which of these recessions do you think had the most profound or lasting impact on the U.S.? Or what are your biggest concerns about the economy today? Share your thoughts in the comments below. Let's discuss this crucial part of our shared history and future. If you found this journey through America's economic trials insightful, please give this video a like, subscribe for more historical deep dives, and hit that notification bell so you don't miss our next exploration. Thanks for watching.